Welcome to the Capital Spreads Weekly Update. Today is Wednesday, the 14th of November 2012. And the week so far, well, it's been quite a negative week. We've had quite a strong turnaround in sentiment since the end of last week. Now, this has largely been driven by a couple of key factors. The first is the fact that President Obama got re-elected towards the end of last week. Now, despite the initial euphoria, people soon came to the realization that we could probably see further deadlock both on the fiscal cliff issue as well as other issues that President Obama might be bringing forward to Congress. In addition to that, we've also had a refocus of the problems and concerns related to the Eurozone, the debt crisis, and particular Greece going forward. Now, there's a realization that there isn't any short-term or near-term solution to the problem, and the problem and the situation only seems to be getting worse in Greece. Now, those factors combined are leading to a great turnaround in market sentiment, which was only very, very bullish just a couple of weeks ago. In terms of figures, we had the UK unemployment out earlier today, and we've had a little bit of good news out of the UK, with unemployment falling again now to 7.8% from a previous 7.9%. Now, this will probably provide a bit more ammo for the UK government and their beliefs and their policies that they've implemented so far. The key highlight of the week will probably be the US FOMC minutes, which will be coming out later on this evening at 7 o'clock UK time. Now, many people will be watching and listening to the words very carefully in terms of what the US Federal Reserve will do regarding quantitative easing. Now, they've already said that they're going to keep their foot on the gas when it comes to QE until the unemployment situation starts to improve in the US. Many people will now be watching in terms of whether that the pedal on the gas will actually be increased, or they'll keep the pressure the same. Tomorrow will probably be the most busiest day in terms of economic figures for the week. We start off with the German GDP figures at 7 o'clock in the morning. Now, there will be the Q3 provisional figures. We're expecting a small fall there to 0.8% from a prior 1%, and that could certainly help define the mood and sentiment for the day. Later on in the day at 9:30, we have the UK retail sales figures. Again, we're expecting a small fall to 1.6% from a prior 2.5%, and this is very likely to follow from the fall that we've had in the US retail sales figures recently, which was largely blamed on Hurricane Sandy recently. Later on in the afternoon, we've got the usual US initial jobless claims coming out at 1:30. We also have the US CPI figures coming out at the same time. Now, we're expecting an unchanged value there of 2% in the US CPI. Then later on in the afternoon, we have the Philadelphia Philly indicators coming out at 3 o'clock. And at 3:30 in the afternoon tomorrow, we've got the US crude oil inventories. Now, the crude oil inventories have been pushed forward a day because we had US Veterans Day on Monday, so that's actually been pushed forward for a day. We round off the week on Friday with a couple of figures, but it'll be a relatively quiet Friday. We start off with the Eurozone current account figures, which will be coming out at 9 o'clock. Then at 10 o'clock, this will be followed by the Eurozone trade balance. And finally, we round off the week with the US industrial production and capacity utilization figures at 2:15. That's it for now. As usual, if you have any feedback, it's media@capitalspreads.com.